43, rolling in 1, 2, 3, let's go.
Welcome to the podcast. My name's Ben, the cool voice guy and new YouTuber. As well as introducing your host, Jake, the co-founder, president, and algorithmic trader from WeTradeHQ. Join our Discord with over 4,200 active members. Follow at WeTradeHQ all over our social media. Let's get to the point.
What's going on, everyone? This is Jake here from WeTradeHQ. Thank you, Ben, for
was
that
the longest
amazing introduction. I loved it.
Follow. By the way, speaking of, sub to our account on
Yes.
WeTradeHQ. We're just over 100 subscribers.
Yeah, we brought 107.
Woo!
So we broke
made
100.
it. Nice.
And
Next goal is
Yeah.
150.
next goal is 1,000.
Okay,
But yes,
1,000.
yeah, we'll
Let's
keep it
do
small.
it.
We'll keep it small. So thank you guys for watching. We are on To The Point podcast today, episode 7 for you guys, where we go over the latest and greatest stock market, finance, crypto news. Just kind of, giving you guys, an update on what's going on in the world and our thoughts and opinions. So before we start with news items, we are going to start with a meme.
Oh, yeah.
And
this one's a good one.
Once again, Wall Street Bets has been supplying fantastic memes. Ben, why don't you take a read on this one and kind of explain what's going on here?
All right, let's take a look. Let's just open it. It's pretty self-explanatory, but we can see that's Mr. Trump walking on the wall.
Yep.
He's saying, no tariffs. Oh, wait, how does it? It's huge. No tariffs if I can have your wall. All right, listen. It's tremendous. I'll do no tariffs if I can have your wall. Basically, there's a wall in between Mexico and the States. He's saying, China, I won't wreck you with taxes if I can have your wall.
Yeah.
Pretty funny.
It is pretty
It's a
funny.
good one. I love it.
So this is a perfect segue into our first news item. We're talking about why the U.S.-China trade deficit is so huge.
Huge.
Huge, as Trump says.
It's huge.
With a Y, and I think 2 U's, right? I think that's how you do it.
Yes.
So let's take a look at all the stuff that U.S. imports. We can see that computer and electronics are at 186 billion. Electrical equipment is 49 billion. And then we look at the imports, or the exports, my apologies, and they're much, much less, okay?
Mm-hmm.
We're seeing that the U.S. Imports a lot more than it exports, and that can be a problem because these tariffs will affect that at a greater range. So let's talk about it. Basically, the meat of this news story is that President Trump is saying that he's going to lift tariffs on $200 billion in Chinese imports to 25% from 10%, so 2.5 times.
I don't know if lift is like the best word. He's raising them.
He's raising
taxes, yeah. So it's going to be 25% on $200 billion.
Yep. And he also threatened to apply a 25% tariff to another $325 billion that have not been applied yet.
So we did the math on that. That's something just on the $325 billion alone, that's like
$70
$70 billion.
Yeah.
Like insane. Or more than that. But anyways.
Yeah. Unreal. So yeah, it definitely affected the market. The Dow Jones and the SPY were down about 1% on Monday, which is still a decent gap down. You don't think 1% is a lot, but when you're talking about the S&P 500, that's quite a big move.
Mm-hmm.
But it seemed to have recovered, and we're still at near record highs for both of those indexes.
Yeah.
Personally, it's hard to come to an agreement with this because both of these countries are superpowers. China and U.S. are massive superpowers. We can definitely say that U.S. has probably helped China get out of poverty from the past with all of their companies kind of moving over shore there. We have Apple over there, Qualcomm.
Yeah.
And they've helped create jobs, create, economies.
Mm-hmm.
Now, at the same time, maybe, in the history, U.S. was a bit too nice. I don't know, but Trump is very determined to raise tariffs on their trades.
Yeah. So far, it's actually hurt the Chinese economy more than the U.S.
Really?
You can kind of see, I remember when this was all going down
Probably around here.
September, October area, he was talking with the president, I don't know his name, of China, and then it just dropped. And I mean, this is more of an emotional reaction, but ever since then, it's just been very grinding. No one really knows. We made new highs, but now we're coming back down. And they're talking about tariffs again. And then the president of China doesn't like that. Anyways, it's done more harm over there than it has here. And the long-lasting standoff could result in lasting damage to the global economy.
Absolutely.
Yeah, if it keeps on going like this.
It's at such a massive scale, so
yeah. Yeah, think about that. $500 billion is insane.
It's a lot of money.
Yeah.
And a lot of can affect a lot. So anyways, that's our first news item. Hopefully they come to an agreement eventually, but that's kind of what's up with that. We're going to start with the second news item over here with Ben.
Yeah. So,
And,
second news item, Uber strike. So Uber is going to IPO tomorrow at the date of this recording. So today's Thursday.
Yeah.
So probably when you upload this, they'll be IPOing. Yeah. So go over there, check out the ticker. It'll be something interesting. I think they're hoping to raise something like 80, 90 billion dollars in shares. It's around there. And so because of this, because they're poised to make such a insane amount of money on their public offering, thousands of their rideshare drivers across the states, even across the world, went on strikes. Mm-hmm. So they're like, you're paying us basically nothing. I think they did the math on it, and it's around $9 an hour. It says here in the news article.
And that's below minimum wage even for US, I think.
But I mean, they're taking the hours and they're dividing it as if you had like a 9-to-5 job, but still like super low paying. And so what actually ended up happening was people in different locations at different times, they went on strike. So all the drivers in New York during rush hour in the morning, no one drove. All the drivers in Los Angeles, they turned off their apps for 24 hours. And basically, they're also trying to target Lyft and other driver organizations around the world in the UK, Australia, Latin America, trying to spearhead the effort to get Uber to notice its employees. Mm-hmm. So the article that we have here on WeTradeHQ kind of keeps on. It goes in to talk about there's a decline in stoppages and strikes, and kind of the whole reason that this is happening is because now it's more popular to be outsourcing your work, and it's also less popular to be in a union. So unions it's a lot easier to strike in because it's a lot safer.
Yeah, you have a bit more kind of support with you.
Yeah, in this case, you don't work and you don't get paid, and the company doesn't have to do anything, right? So, we know that for Lyft, so this article at the end, it talks about an Uber spokesman and a Lyft spokesman, and they're talking about their hourly earnings. So when they calculated Uber's drivers' earnings, it was $9.21 an hour. Mm-hmm. And then they did the same thing with Lyft, and it actually came to an average of $20 per hour.
Wow.
So Lyft, they said that their hourly earnings from rideshare drivers rose 7% in the last 2 years, and they've earned over $14 billion since the company's start. So definitely that kind of shows you where they're putting their priority. They're trying to improve their driver community, right? And I think it shows for sure. But
it's good to see that from them because they've it's definitely gives them a competitive advantage that they care more about their drivers, and maybe Uber's just too harsh on their commissions that they're taking and stuff like that. So,
but Uber was also the first in the game, right?
Yeah,
so they set a lot of the ground rules.
They paved the way, and I mean, like in this article, they mentioned that they were kind of I wouldn't say jealous, but they're protesting that the founders and executives they're making loads of money for going public, and while this is true, I mean, they started this company. They started this idea. They put it into their work. They raised all this money to start this, and that's not a good mindset to be in. But with that being said, they have to pay their drivers fairly. So
totally.
I think things will turn around, and once Uber realizes, hey, we don't have enough drivers, we got to do something. They'll make some changes.
It's a ton. $80 billion. It's insane.
It's a lot.
Yeah,
a lot of debt too. So
cool. Next news item.
Yeah, that was that. Uber. Let's talk about home sales. Luxury home sales have seen the biggest slump in nearly a decade since 2010. Let's do some number crunching here. So luxury homes listed at $2 million and above, this is in the U.S. market, have fell 16% in the first quarter in terms of total sales. So that's quite a big sharp downturn, and it's the sharpest decline since 2010, according to Redfin, a real estate brokerage company. The supply of luxury homes have risen by 14%, so we're seeing more supply, but the demand's not there. Yeah. So the price is going down.
Yeah. There's a reason for that. So I think it talks about it in the article here. It talks about state taxes or something, right?
Yeah. So demand for the high-end homes is in large part due to tax law, which has been recently released. The amount of state and local taxes that homeowners can deduct was capped at $10,000. Okay.
Yeah.
And the mortgage interest deduction was reduced from $1 million to $750,000. So those two kind of laws that were passed, I don't know recently when they were passed, probably last year, but those have heavily affected those home sales, and people can deduct less on their taxes.
Yeah.
So this was from Daryl Fairweather, a chief economist, or Redfin's chief economist, sorry. He says, not only do the new rules make it less desirable to purchase a multi-million-dollar home
In the high tax states.
in high tax states, it has also motivated some people, especially those with big incomes and big housing budgets, to consider moving to places like Florida, Washington, Nevada, where they have no state income tax.
Yeah.
So I think that's going to be a huge player. If we're looking at overall home sales for the U.S., we might see maybe an increase in those states because they're not affected by those state tax laws. So
yeah, it goes on later to talk about in the article that also some of the reason for this is people do telecommuting. That's also way more popular now. So similar to the last article where people are doing outsourcing. This way, you can telecommute and you don't have to live in the general Los Angeles area like downtown or downtown New York, or commute in from New Jersey or whatever. You can live
just outside
2 hours away and still work. You could live across the world and just go in on your laptops. Now that's becoming more popular too, so people can buy a cheaper home and still get paid a decent wage, right?
And working from home is, I'd say, increasing in popularity a lot.
Oh, for
overall,
sure. Yeah.
Just with the internet and social media. So that's interesting. And I'll finish off with saying that non-luxury homes saw their average price rise 2.7% annually to $300,000. So we're seeing a bit more demand in non-luxury homes, and that could be why. Maybe people are downsizing; they don't really need that big house, and we're seeing that shift. So, that was the third news item.
Cool. Fourth news item. So if you made it this far, you're past our average watch time.
Yeah,
play some music.
You're a real one.
Thanks for making it here.
Check mark for you.
Leave a little comment with an extra code, and we'll give you a high five. Thanks for watching this far.
Yes.
Last news item is a short one. So Trump said that the GM will sell its Lordstown, Ohio plant to a company called Workhorse for electric truck production. So it's basically said to create 450 new jobs, which is awesome. Speaking on that note, the U.S. job market just got another new report saying that they, again, made a record amount of new jobs being created. That's
awesome.
Super strong right now, super strong job market and labor market for the states, which is good. And some of the articles I was reading earlier was saying that it's actually been 10 years of this, the longest strong market in history, that it's actually going to be a problem that they don't have enough workers to keep on supplying all the demand. So not that that's happening anytime soon, but yeah, so basically Trump added that GM's going to be spending $700 million in Ohio creating those 450 new jobs, as well as they're selling their manufacturing plant to Workhouse to build electric trucks. So that's basically the gist of the article. If you scroll down, you can just read the tweets between him. Of course, our president is using Twitter
a lot.
Who would have thought 20 years ago that would have affected the stock market so much, but
it does now.
It does now.
Any tweet can affect the market a lot.
Speaking of social media,
follow. Perfect segue, man. Perfect segue. Please follow us at WeTradeHQ everywhere.
Yes,
we are on Twitter.
Twitter, Instagram, YouTube, Discord,
Facebook. That's it. So those 5.
Yeah.
Those 5.
Follow us, subscribe, comment. Let us know what you thought of the episode. If you have any feedback, we'd love to hear it.
Suggestions.
Thanks for watching episode 7
of To The Point Podcast. Peace out,
I'm
everyone.
your cool voice guy, Ben, and this is your host, Jake, from WeTradeHQ.
Hey there. Peace out, everyone.
Oh my gosh. Bye, guys. See ya. Thanks for watching. All right, let's close this.
Those were good.
Let's just end this. Let's end this while we're ahead here.